Welcome to Mine Explorers. Today we are joined by Chris Guenther, who is the finance director of Burgex Mining Consultants, best mining consultancy in the world. But more interestingly, for this episode, he is a junior mining stock enthusiast.
I am that, and I am the petter of Pepper.
Yes,
really
the Pepper
wants
dog.
attention right now.
Yeah, she's funny. She's made a few appearances. So we had Dave Callis on, the lobbyist in the office the other day, and she literally ignored him the whole time. And then she came in, kind of got in his lap a little bit, up in his lap, and wanted pets for 30 seconds, and then left and never came back. She's just like, yeah, I got to check in, just like now. Yeah, so I thought about it. I was like, what's the best way? Natural resource enthusiast, and I figure, junior mining stock is kind of where your interest is, but you've been following it. I mean, we've had a lot of great conversations, a lot of which I wish I'd recorded. So
right, I know. I think about that. It's like this is some good signal maybe for somebody out there.
Yeah,
because we're both into it. We both been in the game for a while. We've both been long suffering.
Yeah, long suffering indeed.
And given that we work in the industry, we have a unique perspective on what it's like, really what success looks like for a junior miner, right? Yep. There's a lot of luck, but there's also doing it right and doing things to increase your odds or set yourself up to just be another serial diluter lifestyle company, right?
Yep, and there's plenty of those. Yeah, and you get to see them and see what the differentiators are over time. Okay, team makes a big difference, but the team doesn't always affect timeline. So you may invest, you're like, oh yeah, this team, a good example for me is the team that turned over Frontier Gold to Newmont. Huge win, biggest win of 2011, kind of that era, for sure, at least in the US.
Yeah.
$2.4 billion or whatever it was. So then they immediately, almost immediately started Pilot Gold. And so I invested right away because first they were in Utah and then they were in a jurisdiction, that I like. And I actually was familiar with the area. I'd been out there and kind of looked around that deposit. And so I rolled right over into that, and I was like, who can lose with this team? And I don't think you really can, but the timeline, they have no control over the timeline. So they exited at the peak of the cycle, started something new, wrote it down, and then now they've slowly been building lots of momentum, but the stock price has never really reached the peak. Backing up though, I just jumped right in there.
That's a good memory for me because I was in OX, which turned into Frontier, which I was in that because I was a follower of Doug Casey and the International Speculator.
Yeah.
So that was a fun ride.
Yeah. That, and I missed all that. I just got in right afterward because I knew about everything that was going on. So how long have you been interested in junior mining stocks?
It's a really interesting story. So in the early 2000s, I was working with a friend of mine, and we were selling insurance products. Essentially, It was life insurance, specifically annuities. So we had a very conservative clientele. And so we would pitch them hey, here's a good CD that we found. And by the way, this is another safe way that's got some rate on it, because rates weren't high at the time.
Right.
And anyway, and so 2006, I remember I started thinking I should probably learn more about the wider world of investing and finance. So when clients come in and talk to me about some of the other things they're doing, I can have at least an intelligent discussion with them.
Right.
And one of my clients was really into gold. He was my brother-in-law's convinced me to basically sell all my annuities and go into gold, which sounded like a really bad idea at the time.
Right.
It actually would have worked out really, really well if he did that, and he held till now. He would have tripled his money or something. But I started following some of the Stansberry investment newsletters, and Doug Casey and a guy named Chris Weber, who's a really good one. Anyway, and so I started going, oh, this is a really interesting industry, and there's like a long cycle investor component to it, but there's also a real speculative upside component to it, and that's what was fascinating, because I don't like, if I go to Vegas, you're probably not going to find me gambling anything,
right?
Because it's literally it's just pure odds,
right?
But there's something about investing where at least we think we can do things to improve those odds,
right,
and hopefully have some really good alpha
in
the markets.
Yeah, and it's interesting. Natural resources a lot like like early stage biotech, pharmaceuticals, things like that, where you're like, if you hit it, you hit it. Yeah. You do really well. But if you miss, you can miss several times before really getting something good, which is where like having the right team and things like that really come into play.
And position sizing.
Yeah.
Do not bet everything on 32 black and pray. Like that's a bad strategy.
Yeah, which is why, ETFs and things like that have really come along, and it's a good way to just play kind of the broader sector. So, and there's a lot of great ETFs in mining that specifically you can focus on silver or gold at different stages of development, which is nice. Versus all on 32 black, you just go all on black.
Right.
Yeah, which is pretty interesting. So, I wanted to talk about some of the macro trends, kind of the bigger picture and what's going on. I read yesterday that one of the analysts at Goldman says that central banks have broken the gold to silver ratio, and that everybody's been waiting for silver to play catch up, right? It's like, 100 to 1. Even my dad talks about it like, gold's never been at this high ratio before. It should be, much tighter. And I've been hearing that for, almost 20 years now. And it's varied a little bit, but it seemed to only get wider. And so the only real solid reasoning that I've heard about why that disconnect's gotten worse and isn't snapping back is that central banks broke it.
I think that's an interesting take. There's something to that. I don't think it's permanent, but there's a good possibility from what I'm seeing that the gold to silver ratio is unlikely to go back to 15 to 1.
Right.
Because we're in a very different regime. We're not in a bimetallic currency anymore.
Right.
And central banks aren't loading up on silver because it's way too bulky, right? And this kind of goes to the bigger picture, and I've been thinking about this a lot, is if gold is now the neutral reserve asset, and it's not that it's going to replace the US dollar, so there's layers to this. So there's what's happening with the US dollar, which has been the reserve currency, and what's happening to US treasuries, which has been the universal safe haven asset.
Right.
And from what I can see, it seems like we need to be able to devalue the currency to start getting competitive again with exporting and manufacturing, and also to make our debts manageable, which also means debt's going to get devalued. So we need the US dollar to come down, hopefully in a somewhat orderly manner, and we want to devalue our debts in a somewhat orderly manner, hopefully. But then what does that mean? And if gold is returning at least to some degree as, okay, it's not US treasuries anymore, but this is the thing that everyone will accept, and you can't play funny business with it, right? Like the US can say, Russia, your US treasuries are no good,
right?
Or we're confiscating them. You can't do that with gold.
Right.
Nobody controls gold. It's not on a blockchain that someone can hack.
Right.
It is when things go bad, this is what you default to.
Right.
And so if we're returning to that, in a multipolar world, then probably gold will tend to stay elevated relative to silver, but I don't think that means silver's dead. I still think there's going to be some pretty interesting movement in silver. It's, can you stay solvent long enough for the irrationality of the market? Like, can you outlast it?
Right. Yeah, it's a long game for sure. Yeah, it's been really interesting just with the latest movements in gold. And then silver's like almost going to break out, almost going to break out, almost going to break out, and it just doesn't. It's just stuck. It's really range bound. And then gold, on the other hand, like, you know, there's a bit of a correction now, but I mean, the trend is still very strongly upward.
It is. And Citibank just came out with a really interesting report in the last day or so where they're saying that mining stocks are a generational opportunity because miners have actually, the big producers have actually been disciplined, not for a minute until they can go crazy again, but they've been disciplined for a while.
Yep.
And so there is a new healthy discipline in the mining companies. Gold has a much higher floor on it. We could easily see the mid 2000s again, but we're probably talking about gold realistically in a range of 2,500 to 3,000 with upside potential. That's a very different regime for their primary product for these miners.
Yeah, and I don't think that's priced in at all right now. It's interesting, Citibank and these big banks who have traditionally been very anti-gold, anti-mining, things like that, are now starting to come around, revise their estimates and things like that.
Yeah. It's like, and this is the zooming out even further, the bigger picture. I just listened to a really great podcast with Grant Williams, who I respect a lot. He's a really good big picture thinker. He just started a new podcast with Dimitri Kofinas called The 100-Year Pivot. And the thing that I keep thinking, and this is what it seems to be like, Stan Druckenmiller, Ray Dalio, like a lot of these big fund managers and big thinking guys are looking at is this a correction in what we've gotten used to over the last 40 years, which is interest rates trending down, which means stocks and bonds float upwards. So the 60-40 portfolio, you just couldn't lose.
Right.
You always bought the dip.
Yep.
You couldn't go wrong. As long as you held at least a couple of years, you always came out great.
Always, yeah.
And is this just another correction and it's just more and more upside for the NASDAQ and everything? Or are we at like a Kondratiev, like 100-year cycle? Or if you want to frame it from Strauss and Howe, the fourth turning, that kind of 90-ish year big picture cycle, which the framing of that makes a lot of sense to me. It helps me stay sane amidst all the division and polarization and anger and sort of questioning and wanting to tear down, and probably the successful at some point tearing down of at least certain institutions and structures that we've gotten really used to. If this isn't business as usual, if it isn't interest rates just keep going down and we're in eternal deflation, or at least disinflation, well, then what does that look like? How do you position for that and position in a way that you can ride out the volatility of that trend change before the trend becomes clear?
Right.
And then you're like, okay, I survived the transition period and I'm on the right side. And so, you know, you and I, our bets are on precious metals and probably other commodities, because commodities relative to the S&P or the NASDAQ or other things is still like at like multi-decade lows.
Right.
So how do you play that? And it's something that's really worth considering. And are we moving to a regime of, instead of passive investing, where you just stick it in the cheapest, lowest cost S&P fund and a bond fund and just forget about it? Everyone's 401k, almost everyone's kind of just auto-programmed to that. Well, is it a stock picker's market?
Right.
You know? And it's interesting that in the context of that Citibank is like, oh, we're going to be advising people to move into the miners because they're going to be paying dividends.
Yeah,
and
that'll be
everything
interesting,
looks
yeah.
very different, because if we're talking about a significant capital rotation in the market, that's really different than the miners might have a good year and then it's back to bad news.
Back to the normal, yeah.
And that could be years. That could be a couple of decades. Like, that could be a big trend change.
Yeah, that's really interesting. Dividends is something I've been waiting to see because I think that'll change things. But even just a big bank like Citi, they start, maybe they're on the cutting edge and they start advising their clients to start rotating into the miners. Well, if that does well, everybody else is going to follow. Monkey see, monkey do. And then you have a huge rotation, which would change the whole game. I mean, there's so many amazing deposits out there that could be explored and discovered and proven up with just the right amount of capital and the right regulatory environment. And the regulatory environment's changing. The capital's not there yet, but you get both kind of aligned. That'll be really interesting. Talking about that, fourth turning, 90-year mega cycle and a lot of uncertainty, you take all of that uncertainty and then you throw AI on top of it, and that's like a huge accelerator. Because like AI is going to change. Nobody knows exactly what impact it's going to have on the economy.
It's going to be a catalyst. We just don't know in what way.
And it's going to be huge. Yeah, I saw a clip yesterday about how the biggest thing that AI changes is now knowledge is democratized. Mm-hmm. So like attorneys and doctors and even investors and analysts and things like that have been able to make a lot of money by hoarding knowledge and being the keepers of knowledge. Well, now that AI can have all the knowledge, suddenly knowledge goes to zero. So it's like when anybody with a computer can have all the answers, like an attorney or a doctor or the best stock analyst, like what does that change?
Yeah, is this like the Gutenberg Bible moment where the printing press got invented and where only the priests and a handful of elites knew how to read and everyone just had to depend on them for any information and no way to verify most of it, right? Is this like a printing press moment for knowledge?
Yeah, and potentially even bigger than that. Yeah.
Not necessarily correct analysis, like that's a whole other ball game, right? That's where like what we do is super helpful for people, but the data, the access to the data and yeah, what does that look like? Who does that put out of work, or is it just a change in industry rather than a bunch of people being unemployed? Is it just a massive productivity gain? It could be. It could be a massive productivity gain that takes the economy to a new level and makes things easier and less repetitive and mundane. That would be awesome. Right. It may not be, Skynet Armageddon.
Yeah, I mean, that's kind of the extreme end of it, like the worst end of it. But I think kind of the base case that everyone's baked in is like everybody gets, 20, 30% more productive. But probably the middle case is somewhere between that and Skynet. Then there's some middle case, and then you pair that with like onshoring and things like that, manufacturing and that stuff. It's like, that's great because we're going to have a whole bunch of white collar jobs. They're going to need to be retrained to do something that AI can't do. Mm-hmm. And so is that rotating into manufacturing? Is that, obviously the trades have a big need. Like we could use a lot more plumbers, electricians, things like that. And that's the kind of stuff that AI is not going to take over really quickly. But like robotics have catching up to do. But if you apply AI to advancing robotics, maybe that could happen quicker. And then we have all these manufacturing jobs that also disappear. What's everybody going to do?
Well, yeah, and then it's like, well, UBI's already been floated, right? So people are sort of aware of that.
Right.
That's a possibility.
Yep.
Which could create a whole nother level of income inequality if you kind of game that out where more and more people are in this subsistence UBI level.
Yep.
So how do you get out of that and become someone that's not living off of universal basic income and have found a way to channel these forces or provide value in some form, right? That gets you out of that and up to a better place.
Yeah. I mean, you'd look at that level, okay, what's still being consumed? Like what are the basic things that are being consumed? And you look at natural resources, okay, there's a lot of, energy, computers, all this AI is going to need a lot of energy, a lot of computers, a lot of processing power, water. And then, obviously all the inputs for the energy, uranium, coal, natural gas, things like that. But then you're like, okay, you have this huge base of UBI and they all have a set amount of money and they're tighter with how they allocate those dollars. Like, is this the Disney movie, the WALL-E? Is this WALL-E where everyone's just sitting in a chair consuming digital
basically
stuff all the
human
time?
Jellyfish.
Yeah, I mean, what's going to be consumed, and then how do you get out of that cycle? And really interesting. I think the potential, nobody knows.
No, and how, and at the same time we're looking at moving back to like more of a subsistence closer to the land. So we could have like a really interesting bifurcated culture in places all over the world where there are communities that are like really close to the land and it's subsistence, but they're happy and it's healthy and they grow their own stuff and they do their own thing.
There's a whole new like Quaker Amish movement.
And then you've got people in UBI, maybe in the bigger population centers, and then you've got the people that have found out how to provide value and bring new things to the market. Energy is a really interesting thing right now because oil could be weak for a while, but there's only so low that can go before people quit pulling it out of the ground because they're losing money.
Yeah,
right. So Trump would love to see oil like at $40-$50 a barrel, but that means there's the Permian and all these places where they're fracking. That's gone.
Yep.
They're going to be losing money hand over fist. So how long can it stay low? That's not a permanent thing. Uranium looks really interesting.
Yeah, uranium looks very interesting
because it's the greenest thing that we've got overall, and the new reactor designs are so dang safe.
Yep.
It's like you can't have a meltdown.
Even the old ones. I mean, like even with Chernobyl, they did everything possible to melt that down.
Yeah.
Like disabled all the safety, pushed it to the limits. Like, I mean, it was insane. Like they could have just walked out of the control room and just left it alone and it would have shut down. But as part of the safety check they're doing, they basically caused it to melt down. And then, Fukushima, you have natural disasters, but they've done so much development since then. I mean, that was a long time ago now.
Yeah. And Fukushima is interesting because one of the things that people don't talk about is how it's like shark attacks. There are so few shark attacks, but it really sticks in people's mind as a legitimate fear. We get behind the wheel of a car like it's nothing.
Right.
And we're like infinitely more likely to get injured or killed every time we get behind our car, especially if you go near the freeway. But nobody thinks about that, right? But you think about it like, oh, I'm swimming, I can't feel the shore beneath me, right? But the likelihood of you getting eaten by a shark is like getting struck by lightning.
Yeah.
Like it's almost nil.
Yeah.
And nuclear, I think, is the exact same way. People think about it, it sticks in our mind because it's so dramatic.
Right.
But the amount of deaths from nuclear anything other than nuclear war itself versus like deaths that are realistically, scientifically attributed to coal burning power plants.
Yep.
It's nothing.
Yeah,
It's nothing. And we've just gotten better at the technology.
I think if you take deaths from nuclear accidents compared to deaths from just coal mining,
oh yeah,
there's probably more deaths from just coal mining. Forget about
the
consumption,
power generation,
the downstream, the power generation,
air pollution, and
like literally just generating the coal itself.
Yeah,
there's probably more. I mean, we have accidents here in Utah that, I mean, I know of several coal accidents that killed more than 100 people. You know, one accident, and there's been more than that internationally. I mean, unfortunately, it still happens, and we've come a long ways with safety. And you know, accidents when they happen now are, you know, one or two people here and there, but historically there've been a lot. And so yeah, I mean, nuclear power, like, there've been deaths, there've been accidents, but even like all of Chernobyl and the after effects, plus the other nuclear accidents, war excluded, don't add up to probably the coal miner deaths. And you can pull the numbers on it and post them. It'll be interesting to see.
It would be interesting to see.
Yeah, but yeah, it's like the shark attacks. You ask people, like, what are you more afraid of? Getting in a car accident or getting eaten by a shark? You know, most people are going to choose the shark, but
because it's visceral, like it's a primal fear.
They should be much more worried about the car accident.
Right.
Because it's a legitimate
But we feel
danger,
comfortable because, we do it a lot.
Yep. Interesting. So what do you see as the biggest opportunities for an investor today that's looking at the mining space?
Well, if Citi is right, and I think they probably are, it seems to me, at least the way I'm looking at it, is I really like the idea of having some of the better run miners and miners that have good organic growth kind of like lined up and on deck as a long-term sort of beta play, like just capturing sector upside generally with a little leverage. I think generally it's going to be a stock picker's market because we're passive investing. Again, assuming that this is a regime change and everything doesn't just float up forever and ever in the indexes.
Right.
It's a stock picker's market. I think it's going to be that way in mining. And so it's getting good signal sources, finding good teams, having patience, and picking good alpha stories. And I mean, kind of pick your commodity. Like if you get a good win, like Filo del Sol is an incredible example. Filo Mining was a phenomenal win. They found a killer asset, and you know, if you got in early without even having a huge position, but a meaningful one, you could have retired.
Right.
Right. So it's like even and that was through mediocre to bad markets at times, but a great win still moves the needle. So so finding alpha almost regardless of the commodity to a certain degree is going to matter. I think uranium looks really, really good, but all of this can't be like a call option mindset where it's like, well, I'm going to give this 3 weeks or 3 months to play out, and you know, I'm betting on Tesla to do a moonshot, and then I'm going to pull it. Like these are all, it really is an investor type mindset, and being willing, as Rick Rule likes to say, to like spend the time, know the companies, understand what's going on, understanding when your thesis is getting proven or it's failing.
Right.
So.
Right. Yep.
I think gold mining juniors that are onto something are going to do really, really well because gold probably does have that higher floor. I still like silver. I wouldn't go too crazy on any of it though. Like I'm very careful about my position sizing where it's like it's big enough that it multi-bags, I'm going to be happy. Right. And if it eats it, I'm not out of the game.
Right. Yeah. Yeah, that's a tough one. Yeah, I got into silver 6-9 months ago. I had a good ride up and I'm still up, but I think there was a lot of anticipation for silver to go much higher, you know, break into the 40s and stuff, and it didn't. So things have pulled back, but still long term, like especially when you look at some of the established producers, like Hecla has 2 projects now on the Fast 41 and expansions, and they're, you know, they've had their head down and they're focusing. A lot of the other silver miners are doing well, plugging away. No crazy acquisitions or anything.
Core's got some good stuff
disciplined.
lining up.
Yeah.
Endeavor Silver is an interesting one. Mag Silver looks like if they can keep executing and keep their costs in line, and silver, I still think silver is going to get that move, but this is what silver does.
Right.
It just beats you to death or bores you to death.
Yeah.
And then it goes.
Yeah.
When everyone's pretty much given up on it.
Yeah, and they're long cycles, really long cycles. It's tough. Yeah, Mag Silver's interesting. They've got their Deer Trail project here in Utah that has potential to be much more than just a pure silver play. Potentially porphyry. There's like VMS potential. They've got basically a district tied up. There's a few different potentials there, but it's they've got a couple of projects with potential to be much bigger that are kind of more exploration, more down the road, that are interesting. That I think some of those will eventually get spun off to somebody who can really develop that's more focused in the polymetallic space. But they've been really interesting to watch. One more question I had is, so you've been investing in juniors for quite some time, and now you're at Burgex, and you get to work on the inside of the industry. How's that journey been?
It's been really interesting because we take what comes to us at Burgex. Mm-hmm. I mean, if I could go and just press a magic button and try to work for all the juniors that I'm really interested in,
right?
But not all of them are in our area, right? Operating in our area. But it's cool to be on the inside of the industry and doing things at a way above average level. Like, we do really good work. Our landman work is excellent.
Right.
Whether it's the desktop, or it's understanding and navigating the filing system, or it's the staking and really paying attention to the details, the economic modeling, the geologic modeling, like, we do really, really good work. So on one level, it's just cool to be a part of the industry, but I feel really good about being part of a team that's bringing meaningful value and quality and clarity to an industry that historically it's not very clear, and can be a lot of shenanigans with people trying to juice their share price rather than, or people want to hear, yes, you're sitting on the next Fruta del Norte, when they just happen to have some pyrite in their backyard, and it's kind of nothing, right?
Yeah.
So like, I love that our team tells people what they need to hear, not what they want to hear. And occasionally we get to say, yeah, this is potentially going to be really good.
Yeah. I mean, I've probably given up on the front end millions of dollars in potential projects by telling people when they don't have anything really quickly, especially like established teams. They know what they're doing and I don't tell them. But if somebody comes to us and they're like, hey, I'm a speculator, I happen to buy a mining property, or my neighbor is a prospector and he's got this and I want to invest a bunch of money into it, shutting that stuff down quickly, it's really helped us build a reputation, which I think is a long game, going to pay off in the long term. But in the short term, probably millions of dollars of revenue that we've given up on by saying, hey, you don't need to drill this property. What you're looking for is not here. There's no indicators. A competent team would look at the data you have and say, your odds are astronomically low. And so that's been hard. It's been one of the harder things of the business is we won't just take anyone's money to do anything. Like, we want to make sure that we're providing value, and we're really careful about that, on the hopes that some come back again. And then other ones, it's just more of a kindness, like, hey, Mr. Real Estate Investor,
save yourself the pain and the expense.
Stick to multifamily. This gold opportunity looks great on paper, but trust me, there's nothing there.
Yeah. It's like, from the perspective of a junior miner, you can play the pump and dump game, but in the next cycle, who's going to give you money? Because it's clear that you aren't trying to do things the right way. You're not really trying to create value. You're trying to extract value. Right. So I like that we're doing things the right way. We encourage our clients to do things the right way. And if they're clients that are about doing things the right way, then it's a great culture fit.
Right.
And we trust them and they trust us, and we're all looking for the truth rather than the thing that we want to hear.
Yep. And we miss out on the pumper dumper business from that. But, there's always the saying, like, you can mine the deposit once, but you can mine the investors over and over again. And while there's truth to that, I think the amount you can mine the investors for gets to be less and less and less. Like in the 70s and the 80s, there were guys that could just run pump and dump after pump and dump after pump and dump because all the information was hoarded. You couldn't just go to Google and go.
It wasn't easy to go, this guy's done this 5 times and burned every company to the ground with dilution.
He has 3 SEC violations, and the Canadian Stock Exchange has given him multiple violations. And look, all of the other shells that he was running are now cannabis stocks, or they've gone to zero, or whatever. With the internet now, I think, you can come in, get a good story. You might be able to raise a couple $1 million and blow it, take some vacations, spend, a bunch of money on your friends doing different things for you. And then the next time around, you may get a couple people in early because they're like, I'll ride the pump and dump with you. And then inevitably they're going to get burned. And then by the 3rd or 4th time, like, it's going to be really hard to do.
It's like crypto, right?
Yeah.
It's like crypto. There are people that are actually trying to build value in the space, and a whole lot of pump and dumping.
Yeah.
A whole lot of it.
Most of them are there, but I expect some are going to rotate back to mining. And then you get like the really amplified ones where, like, I know some people from the past that in the mining industry, and then they went to crypto, and then they got into cannabis, and then they did the whole super hypey kryptonized cannabis coins and stuff, and went way into that, and like just really like riding all the buzzwords and stuff and just providing no real value. It's all just hype. So like some of those people are going to try to rotate back, but I think, and some of them will pop up and some of them will make money, but I think that with the internet, it's just hard to do that.
Yeah, and kind of circling back around to what I think are good opportunities. I like having an allocation to gold, even just physical or something that's tied to physical, like Sprott's PHYS product or something like that. I think having some exposure to Bitcoin is a hedge.
Yeah.
Not like all in, not like the Bitcoin family where they sold everything and went in on Bitcoin.
Yeah.
Most people can't survive that kind of volatility.
Oh yeah.
And maybe quantum computing cracks it, I don't know, but I like having an exposure to that because we're just in a very interesting place. And there's some really smart guys in the big money space that aren't crypto enthusiasts, but they're like, this could become a significant wealth storage asset like fine art or something else.
Yep.
It's good to have some exposure. You don't want to live and die by it.
Yep.
I also think potash looks really interesting. I think fertilizers and the inputs to that are pretty cheap and are beaten down or probably at the low end of their cycle.
Yep.
So that's a really interesting space. Not necessarily in the next few months, but probably over the next few years could be a lot of alpha there.
Yeah, and there's part of the Fast 41, there's phosphate. It's a phosphate mine in Idaho, the Bayer's running. And then there's a couple big potash projects that are part of that as well. Not part of that, but part of the Fast 41. So it's on the radar, but yeah, also really hard long-term thing. So we've got potash here in Utah, and we mine it down by Moab, and we mine it out by Wendover. But there's potash in all the brine from the Great Salt Lake, all the brines under the salars, and then down in like the Sevier Lake area out by Delta, kind of south of Delta. There's potash. And there's also lithium. So it's interesting to see that project flip-flop. And then we have some pretty major potash projects in like the Wawa Mountains and stuff that have stalled, aren't developed. So potash could be a really interesting one from Utah on the exploration side. If we had any clients that are really interested in looking for potash, I think now might be the time. And then the other one that came on my radar when I went to AME is I had a couple potentially major up-and-coming copper miners come up to me and say, if you can find us a source of elemental sulfur so we can make our acid, that's going to be huge. We can't find it anywhere and we need to find it. So they will mine it if they have to mine it. They'll create a satellite mine, they'll produce it. But there's an opportunity for a junior to get in there, create some mines somewhere in the western US, kind of central. Obviously, a lot of the demand's going to be in Arizona coming up, but elemental sulfur, and it's something that's really not on anyone's radar.
Yeah, no one thinks about that except I think Kazatom, I think that's one of their input throttles right now, and one of the reasons that they have been missing their output targets, and they're like the biggest source of uranium right now, is, well, there's suspicion that there's problems beyond not getting enough sulfuric acid, but
Right.
they can't get enough sulfuric acid.
Yeah, that seems to be a theme. So yeah, not necessarily things for an investor, like a retail investor that's interested in junior miners, but for junior miners that are good teams that are looking for potential projects, those are some ideas that I've been looking at, and be interesting to work on. So hopefully somebody sees it and decides to jump on it and hires us to go help them find it and develop it.
That would be fun.
Cool. Yeah. Any last minute or ending remarks?
I would say ask good questions, really think about things, consider the possibility that maybe this isn't business as usual and it's a little volatility, and then everything's going to keep floating upwards. And maybe start asking some really good questions, and then considering the knock-on effects of that, and maybe start looking at, well, if that's the case, how would I do things differently? Who are the people that have been talking about this? Maybe they've got some good ideas.
Yeah, and do your research. And there's a lot of really good analysis out there, and it's all pretty much free. I mean, there's newsletters and things you can subscribe to, but now with X and with ChatGPT and Gemini and all that, like, you can get some pretty high quality research.
There's really good signal on X. You just have to curate it. You can curate out all the noise and the ridiculousness and the fighting, and there are people talking about really good intel from Ray Dalio and Stan Druckenmiller and some of these guys that have been thinking about this and positioning well for it. And there's some good stuff out there. Luke Groman is a really good source too. He's a good big picture thinker. Yeah,
the noise is interesting. The Bitcoin versus gold.
Yeah.
It's just like, and it's every day. There's like, I get a notification that there's a room and they're talking about that, and you get the laser eyes guys in there, and you can see all their profile pictures, and they're all, Crypto Cat and Dragon Crypto 99 and all these guys, and then you get the typical gold and silver bulls in there, and
yeah, they're basically both saying have fun staying poor to each other, and it's like, what if they both win? Like, who says it has to be A or B?
Yeah, and then you get Peter Schiff right in the middle of it every time.
Mm-hmm.
Always just back and forth arguing about Bitcoin. And
I wonder how much of it is just for eyeballs, and they aren't really that dug into this is the only way.
Yeah. No, and it's not. I mean, I see crypto as being very interesting, and I see a utility there, but I have been frustrated that it's taken a lot of the retail investment out of looking for actual commodities. And at the end of the day, I think the odds of quantum computing will crack Bitcoin before chemists figure out how to synthesize gold in a lab.
That is probably true.
So if I had to say, like, one or the other, which one's going to get busted first as a potential reserve, I'd say the quantum computing is going to win.
My pushback on that, or at least the upside potential, is as quantum computing develops and as big of a market as Bitcoin is, and some of the brightest people in the tech space are involved in it, I suspect Bitcoin will keep evolving and will manage to stay ahead of that. I don't think it'll just sit there and let itself get taken out.
And I would agree, and I've thought about that. The only counter I have to that is I think it's going to be cracked by China. And they'll do it in secret. And so there won't be an opportunity to really stay on top of it. Like, everyone will just wake up one day, and it could be
the ultimate rug pull.
5 years from now, 10 years from now, 50 years from now, and everyone in the Western world's going to wake up, and all their accounts are going to be zero, and it's all in China. And of course, it's worthless at that point. But if there was like, say, the U.S. creates a strategic Bitcoin reserve, which is something they've been talking about, and it grows, and it's like $1 trillion, and suddenly China's like zero one day, like, it's a pretty substantial weapon. Because I mean, that's where it'll come from.
Yeah.
Because they're dedicating significant amounts of their GDP to AI and computing and pulling ahead really quickly and doing it in a very opaque way. Whereas like Google, their quantum computer, they reach a new benchmark or break a new barrier, you hear about it the next day on the news. It's not going to happen in China. They're going to develop, and then suddenly, no more Bitcoin.
It's like the new nuclear arms race.
Yeah.
From the previous century. It's who's going to escalate, who's going to be the one that pulls ahead, and then hopefully we reach a place of parity with that too, where it's like, we're not going to use this against each other because it would be catastrophic. So let's find ways to use the technology to make things better for people. I think AI has insane potential for resource distribution. Thinking kind of like Buckminster Fuller's idea of like, there's enough resources around the globe for everyone to live a prosperous life.
Yeah.
We're just so tribal and bad about how we allocate and distribute that AI could really help us with optimizing a lot of that stuff and make things better for everybody, which I really hope that's what we use it for.
Yeah. Yeah, it's just human nature is to be greedy, and that gets in the way. But, like you talked about, so there's enough resources for everybody, and now that global population is slowing and or declining, that's even more so the case.
Mm-hmm.
So, on that note, that's a good episode. It's a lot to chew on.
Yeah, it was fun.
Yeah, thanks for coming down to the studio and
my pleasure.
Sitting down today, and it'll be an interesting ride. I think the next couple of years are going to be really fascinating.
No matter what happens, it's going to be real interesting.
Yep, that's for sure. See you next time.